Yeah, so I think there's definitely been a collective sigh of relief across the tech ecosystem, particularly in the U.S. And to your point, it has been a very challenging time for companies to raise money. And then the capital that they do have, the potential of that being locked up or not accessible, even to do payroll and to do basic operations, it was just a lot of stress went into the system on Thursday, Friday, Saturday. And you can understand why SVB saw $42 billion worth of wires come through just on Thursday as people are trying to move that money into other banks.
So I want to take a step back. I mean, when people talk about SVB and take a look at it, and historically, this has been and was until 48 hours ago the go-to bank, right, for startups, et cetera, and for VC. You got to ask though. I mean, some people may have a point. They joke that look, what VC guys shouldn't have been running a bank. 90% in long-term treasuries in a rising interest rate environment, little to no risk management. That's a lot of money at stake, other people's money.
Yeah, and I think it's partly the brand that was built off of the product offering. And so I think they had built a very strong product offering for venture capital firms. Yeah. And then I think as the firms adopted SVB as the go-to bank, I think that then flowed down to portfolio companies. And so even if you think about a Southeast Asia exposure perspective, we did an audit of our 70-plus companies. We only had 2 that had exposure to SVB, and only one of those had material exposure. And that was really because they had operations in the U.S. It was a core holding account for them to do payroll and to do basic billing.
Here's an interesting question.
But I think in Southeast Asia, I think the thing you'll find is firms actually adopted SVB. And so it's actually, for Jungle Ventures, it's our primary bank.
It is.
And so as we issue capital calls, all of those capital calls flow to SVB. And then we leverage that capital. Now, for us, we have different capital controls and governance that really, we pull a lot of that money into Southeast Asia, into Singapore banks. And so for us, the exposure to SVB was not large. But I think from a firm perspective, you'd see a bigger impact here. And that's really because the local banks here aren't providing the same product and services that SVB provides.
So there's almost no choice.
Right. And the question there, too, is if it happens to SVB, we also saw what happened to First Republic and a number of these other banks that VCs in the United States bank with. If that is a source of capital that suddenly tightens up, could this actually impact any inflows of potential funds into Southeast Asia, then impact the financing conditions for a lot of the startups here, from Indonesia to Singapore to Malaysia and the Philippines? Is that something we'll have to watch out for, a bullwhip effect of some sorts?
I think it's a watch out, but I don't think the contagion spreads. I think Secretary Yellen and the government did a fantastic job of stepping in and creating, taking away a lot of that risk, creating a lot of stability in the markets. First Republic also increased their liquidity balance, so I think they're well capitalized if there was going to be some withdrawals. I honestly don't see that happening. And to Brad's point earlier, the funds in Southeast Asia here, we are well capitalized. There's a lot of capital to deploy. I think it's being selective because of the macro environment. And so I think access to capital is a little bit harder.